Hello and welcome back to FOREX Investment Group. It's been long since I last uploaded a new video on this channel, and today I've come with a new strategy that can actually give you a potential to earn $50 each and every day whenever you are trading several pairs. So before we jump into the whole video, please make sure to check out our free Telegram channel. The link is right in the description box below. So without wasting much of your time, let's actually jump into the strategy. So the only indicators that you are going to need for this particular strategy are the 13 EMA, that is the one in red on my chart, and the 50 EMA, that is the one in blue on my chart. So the only thing that you need to see is a crossover of these two EMAs. After a crossover, you need to see a flow of the market, right? That actually signifies that there are some contracts that are being induced to take positions within that market. Like in this case, this is a CAD against CHF, and on this pair we can see that we had this as our lowest point. Then after that we can see that we had a crossover of the 50 and the 13. Then after that we can see the market coming back to retest the 50 EMA and then went up. So the point where you will earn $50 is you will be using at least a 0.1 lot size, that is a mini lot, and taking 50 pips on that particular market flow per day on any pair that is presented you with this particular setup. So your entry will be after candlestick rejection of the 50 EMA. In this case, we can see that there was an inducement. After that inducement, the market came back to the 50 EMA, rejected, actually showed us signs of rejection of the 50 EMA, and then went up. Our 50 pips was definitely going to be hit. After that, we can see that the market from this point, it went down, and in going down, we had a 50 13 EMA crossover. After that, we can see the market coming back to the 50 EMA and showed us some rejections on the 50 EMA, and our 50 pips was definitely going to be hit. Then after that again, we can see that the market gave us a 50 13 EMA crossover after coming from this point, and from there we had this 50 EMA retest and rejection, and our 50 pips were going to be hit. Actually, if we are using a 0.1, it means our $50 was earned. And another example, let's go on CHF against JPY. To look for these particular setups, basically you need to see, in this case we are going to start randomly. Let's actually start where we can see a 50 13 EMA crossover, this point. Then the crossover occurred at this point, then an inducement flow going up. After that inducement flow, we can see the market coming back to reject the 50 EMA, although there was a slight consolidation, but our 50 pips was going to be hit. Then still within the same EMA crossover, we can see another retest of the 50 EMA, and another 50 pips was going to be hit. After that, we can see from this point we had a 50 13 EMA crossover, and we had this rejection retest, and our 50 pips was going to be hit. Unfortunately, we did not have a retest here, but it was a good point if this candle wick actually touched the 50 EMA. Then here, an inducement flow, a retest. Let's now see if we were going to have our 50 pips at this point. 50 pips was going to be end, therefore it was a winning trade. And another point, we had a 50-13 here. After that 50-13, we had this retest of the 50, and our 50 pips was going to be hit. So basically that is what you'll be doing. You need to see a 50-13 EMA crossover first. After that, you need to see an inducement flow, actually a flow away from the crossover. Then after that, you need to see price pulling back to the 50 EMA and showing rejections. That is, at least see some wicks off the 50 EMA for you to make your entry. Then your take profit will be at 50 pips. So it's 50 pips away from your entry and 20 to 25 pips in your stop loss side. On that note, we come to the end of this video. Thank you for watching. Like and subscribe.